Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. With just an hour to go until the closing bell, and the Dow, S&P 500, and the NASDAQ all aiming for records as Wall Street returns to rally mode. NVIDIA shares, okay, stalling a bit right now, but of course we know that follows a major milestone for that company. Investors also weighing Delta's upbeat earnings results, all while waiting President Trump's next tariff announcement. So let's bring in our team coverage here. We got Bob O'Donnell, Technalysis Research President, Washington correspondent Ben Worschel, and senior reporter Alec Canal. They are all going to help us break down the headlines throughout the show. Ben, let's start with you, my friend. What is the latest in D.C.?
Yeah, it's been a bit of a quieter day here on the trade front. Everyone's sort of, as you mentioned at the top, waiting for the next shoe to drop. And we were promised sort of a flurry this week of both trade deals and trade letters, both of which have come to a stop. We, of course, have not gotten any new trade deals this entire week, and we've gotten about 22 letters so far with Trump dictating tariffs to countries. The biggest letter by far is the one with Brazil. That was one of the most recent ones to drop, and that's a 50% tariff on Brazilian imports over not trade issues. The U.S. actually has a trade surplus with Brazil, but over political ones, and it's what President Trump describes as the mistreatment of the former president Jair Bolsonaro, who's accused of trying to overturn the 2022 election there. Bolsonaro, of course, is sort of a close Trump ally there, too. The other major trade headline that's still being chewed over is the copper tariffs. We have full confirmation that those are going to come into play on August 1st alongside Trump's other tariffs, and that's another 50% duty that will join Trump's 50% to 100 duties on steel and aluminum. So all three of those metals will have 50% duties at that point. All of this comes, of course, as this August 1st deadline is now the sort of focus for trade watchers in the coming weeks, with a lot of questions both in the market and here in Washington is that exactly what this looks like when it comes into place in a few weeks' time.
What's interesting, Ben, as Trump targets Brazil here, and you kind of touched on it, but this idea, Ben, it just felt as you were reading this that it's just for different reasons here. You know, it really did sound like this was about politics this time around. I'm just curious what you make of that, how you think that lands in Brazil, how you think that could be interpreted by other trading partners.
Yeah, I mean, I think that's a real significant development because we've seen this from Trump on other fronts where basically tariffs are his answer to almost any problem. He's talked about tariffs as a way to solve everything from the war in Ukraine to all these world issues, but he's never done it in quite this way, using what are supposed to be emergency economic powers to achieve what is essentially a political end. Jair Bolsonaro literally endorsed Trump in 2000 when he was still in office, and he's accused of trying to stay in power even after losing that 2022 election. So that's the main sort of differentiation here between this and everything else this week is there's just no basic economic rationale. Like, you can try to come up with how coffee prices might rise a little bit because they send coffee to us, but it's really about politics. The other point I think to make here is that there's no clear off-ramp. You hear a lot from Trump where he makes a threat, and it's kind of clear what the concession they can give. He threatened Canada a few weeks ago about their digital service taxes, and they dropped them on that. But there's just no clear off-ramp here because this is about politics. This is about the current president is the one who defeated Bolsonaro in 2022, and there's no reason for him to want to give the guy who, one of the allegations from the prosecutors is that Bolsonaro plan to poison Lula. So why would Lula want to do this, especially given that this is sort of a purely political thing for certain?
And so Ali, so Trump and tariffs, trade making headlines. How are markets moving with those?
Taco trade at work here, Josh. Markets are largely looking through a lot of these headlines. We have the NASDAQ on pace for another record close. We closed at that all-time high at yesterday's close. So if these gains hold, we'll be at a record for the NASDAQ. And then the S&P 500, it's been about a week since that last record, but we are currently trading above that right now. So again, up about 0.3%. And the Dow, even though it's off a bit from its own record highs, we're still up around 250 points there. So looks like a lot of exuberance on Wall Street. Doesn't seem to be much that can stop this rally. We had earnings from Delta earlier today. They reinstated guidance. They said there's a lot more clarity around tariffs, around trade, even the tax bill. So that's helping to lift Delta shares. But then if we take a look at the NASDAQ 100 and some of the movers here, we have NVIDIA up about 0.6%. You have AMD over here rising around 4%. This comes after an upgrade from HSBC. Now, AMD is a competitor to NVIDIA. Even though it's a much smaller company, their chips are about 30% cheaper. So HSBC citing that as a tailwind here and saying that AMD can definitely compete in this space. But if we take a look at market cap, NVIDIA is still hovering around that $4 trillion cap that it hit yesterday, the first publicly traded company to be able to accomplish that. And if you take a look across the board at all these Mag 7 companies, you have Microsoft right behind them there at 3.7 trillion. Even Apple, which has really struggled this year, is at a 3.2 roughly trillion dollar market cap. And then Ben was just talking about those copper tariffs officially getting a due date on August 1st. And if we take a look at commodities to see what copper futures are doing here, we are up a bit today, not as much as we were when these announcements were first made. If we take a look at a 6-day, you'll see that spike that we saw over the 6-day period. We're up about 12%. But, in terms of the major indexes, in terms of equities, looks like traders are largely looking through a lot of these risks.
And Bob, I want to get your take in here as well, because we're talking Trump and trade and tariffs, Bob. But as Ali was just pointing out, they're also right back in focus for investors. NVIDIA hitting that remarkable milestone. It's AI, it's tech. What do you make of it?
Well, look, it's clear that we're still very early in this AI era. And so everybody is starting to recognize that, yes, there are legs to the AI rally. And so obviously, as you said, Josh, NVIDIA is driving this. I think that's a big part of the AMD story. They really do have some very competitive offerings. We're seeing HPE and some other big tech companies getting bigger because the other thing that's happening, not only is it the big public clouds that are spending money on these AI infrastructure, we're starting to see individual businesses. And that becomes very interesting, this idea of an enterprise AI factory. That, as well as sovereign AI factories, the idea that all these different countries are going to want to have their own infrastructure as well. So, look, a lot of that is going to be NVIDIA. They are getting a lot more competition from AMD and the other big cloud guys all doing their own custom chips, and we'll start to see that. But at the end of the day, NVIDIA, gets most of the glory. And the other thing is, I think there's this recognition now that, look, yes, they would love to have China, but you've got models being built with China income of 0, and they're still okay. And that's crazy if you think about it. And so any incremental income from China is sort of the gravy on top. So I think that's why you're seeing this continued excitement. The tariff thing logically should have a bigger impact, but it's just not.
Ben, Ali, thank you for helping us kick off the show. Appreciate it. Joining us now is Stephanie Aliaga, global market strategist at JP Morgan Asset Management. That firm has $4 trillion in assets under management. Welcome, Stephanie, to the show.
Thanks for having me.
So let's start with Trump and tariffs and those headlines, Stephanie. It seems like the market continues to just shrug that off because I'm looking at the popular averages. They're all green right now. In part, Stephanie, is that because investors think, okay, well, the deadline, it's weeks out, it's August 1st. I can kind of put that to the side for now. Is that what's going on?
There's two things. I think, the question is, what do tariffs mean for the economy? Mm-hmm. What do tariffs mean for the markets? And right now, they're telling you different stories. Mm-hmm. We think for the economy, there's still a pretty significant drag underway when it comes to tariff. We have this all-star athlete, the U.S. economy, and we've just put a 50-pound backpack beneath it, and we're not going to expect it to run as fast as it has historically or the last couple of years. So we do see more slowdown to come. That has implications for margins and for earnings this year. But when the company's leading earnings overall and markets are so narrow in nature and are really more aligned to the strength and the secular theme when it comes to AI, that's where tariffs become less of an issue, particularly given that we've seen there's less of a desire to really clamp down on semis and other really tech-sensitive imports from the administration.
That slowdown, Stephanie, you see for the economy, is that baked in terms of corporate earnings expectations?
We don't think so. And there's likely more to come. I mean, some of that is, but it's hard for analysts right now to assume what is the effective tariff rate that we're going to be looking at this year. And also, what are the different carve-outs that we see for certain countries that maybe companies can just reroute their imports from versus ones that maybe they really can't. I mean, these sectoral tariffs are actually the bigger risk for margins, we think. So more of that is likely to come. Now, I will say the hard data so far has shown a lot of resilience. This is an all-star athlete, right? But there is still, I think, a lot of weight that is yet to be appreciated by the market.
Let me ask you about another thing we were just talking about at the top of the show, which is NVIDIA. I'm just curious to get your thoughts on sort of just the broader mega AI trade and theme, Stephanie, and how excited still you are about that.
Yeah, there's three key things going for the AI theme at large right now is that we've had significant advances in the capability of these models, another one this week. Also, the capability from enterprises now that they're investing in their own niche use cases and agents. Beyond that, we also have the cost curve, right? Costs are coming down, hardware is getting more efficient, and then adoption is really picking up. And so what does this mean? Well, as adoption is widening, you have more potentially buyers for AI services and AI infrastructure. That gets to that timeline to profitability. Maybe it's quite quicker for these, or far quicker for these companies relative to prior tech waves, and we've definitely seen that. And beyond that, I think it also suggests that the beneficiaries of AI are also broadening out. So we see the narrowness in the public equity market, but we have to think about what are the other players in this space, maybe on the receiving end of all of this capital spending from the hyperscalers. Maybe they're in private markets. You know, the AI coding boom went from generating $300 billion in revenue last year to now $1.6 trillion, largely led by a lot of private companies. So what are some of those opportunities? So for us, it all comes down to you need diversification, not just for risk management, but also if you're trying to really take advantage of the emerging winners here in the AI.
Q2 earnings season on deck, right? Big banks are coming first. What are you listing for there? When you hear CEOs and CFOs talking, do you want commentary? Is it the economy? Is it tariffs? Is it consumers?
One thing that really surprised us to the upside last quarter was how companies were really looking at their war chest. You know, what can we do to either manage headcount, reduce costs, move supply chains to protect against tariffs? And then also, who's the consumer that we're selling to? And what is the price sensitivity that we're getting from them? And so I think from this quarter, what we're looking at, and what we've heard from the airline so far, very early, but some signs of a bit of a rebound in that consumer in demand, particularly for discretionary spending. That's a good sign. We think also just the ability to kind of manage some of these tariffs, maybe you're passing those along to consumers given the continued resilience. That will be good news. And then overall, I think if companies now feel that they have the confidence to make those capital investments, to increase headcount where needed, I mean, that would be something that really makes us feel quite comfortable about the underlying health in corporate earnings. But right now, we're looking for a bit more of a mixed bag in messaging.
So against that backdrop and that environment, Stephanie, broad strokes, how are you advising clients to be positioned right now?
We think diversification is really, really key right now because markets are extremely concentrated. If you were, for instance, to allocate some money to a quality ETF, a value ETF to help diversify that growth exposure, you might be surprised to find that many of those ETFs or indices contain something like 15 to 20% of a weighting in the 3 mega cap tech companies. So you need to think surgically about diversification in this market because we don't want all of our eggs in one basket. One thing that DeepSeek did for a lot of us earlier this year was remind us, look, surprises can come in this AI race from where we least expect it, right? At the least expected time. So you want to make sure that you're in a boat that is sturdy, that can really take you through whatever may come. Because there's still a lot of uncertainty out there.
Stephanie, great to have you on the show, as always. Thank you.
Thank you.
Meanwhile, the U.S. Defense Department making a big investment in rare earth metals, becoming the largest shareholder in mining firm MP Materials. That deal includes a $400 million investment from the Department of Defense, as well as $1 billion in commercial financing. It aims to reduce U.S. dependence on imported rare earths. Senior markets reporter Inez Vray joins us now to break down that deal. Inez.
Yeah, Josh, and this really underscores the U.S. strategy, the government's strategy to be independent of other countries when it comes to critical minerals. The deal consists of three main points, one being the investment in MP, that $400 million preferred equity investment that you were just talking about, also a price floor for those minerals, and then an offtake agreement. So I'll get back to this in a second, but first I want to just back up and say China controls most of the critical and rare earths, so 60% of global reserves, 85% of processing capacity, and the U.S. wants to not be dependent on China. There are about 50 critical minerals out there. A subset of these are rare earths, and these are the ones that we're talking about here. And these rare earths are used for magnets. These magnets are used for autos, they're used for weaponry, they're used for electrical grids. They're very, very important. So what this deal does is the DoD is committing to purchasing output from this company. It's over a 10-year timeline, and this is very, very bullish for the company and for the entire industry, really, when we're talking about rare earth companies that are mining in the U.S. and that are making these magnets here in the U.S. for consumption in all types of industries.
So Inez, here's my question. My government is teaming up with this company. My Department of Defense is teaming up. That's great. What is in it for Inez and Josh? What is in it for the American taxpayer?
Well, this is interesting because in an interview, the CEO was saying this is not a nationalization of the company. They still remain a public company. They have control of their company. They are there for the shareholders. This is about the investment that the U.S. government is making in this company of preferred equity. And so in effect, what they're saying is the taxpayer is a shareholder of this company, controls a 15% stake in this company. So that's what's in it for the taxpayer, so to speak. I did look at the financials for this company. It's interesting because they are supposed to be profitable in 2026. They did have a year of profitability, 2023, for their adjusted EPS. Then minus 44 cents in the next year, and this year projected to be a negative 57 cents also. But look, the following year profitable. So I spoke to someone else from another company of rare earths, and he said, look, this lifts all tides. This tide lifts all boats. You know the saying, but it's basically, this is good for the entire industry.
All right, and as we shall see. Thank you so much. Appreciate it. We are just getting started here on Market Domination. Coming right up, NVIDIA back in that $4 trillion club, but will it close there? We're going to check in on the chip giant on your side. Stick around. Much more Market Domination. That's still to come. Wall Street watching patiently as chip giant NVIDIA continues to power toward becoming first company to close out a trading day with a $4 trillion market cap. Yahoo Finance's Dan Howley has been tracking the moves. Dan, where do we stand?
Yeah, Josh, we're just at above 4 trillion right now. It's been kind of up and down all day long. So we'll have to see whether it lands at 4 trillion at the close. Obviously, they passed the mark yesterday. That was a huge deal, first company to do it, especially for a company like NVIDIA. You know, you have Apple that had crossed 3 trillion, Microsoft 3 trillion, Microsoft kind of maybe the next to get to that $4 trillion mark. But, you know, for NVIDIA, a company that, you know, what is it, 3 years ago, maybe even 2 years ago, if you really consider it, most people were kind of barely aware of. If you were into gaming, you were very aware of it. If you were really interested in the data center space, you were probably aware of it, but not necessarily as much as you are now. But obviously, this is a huge move for NVIDIA if they close the day above $4 trillion, the first company to do that.
Bob, I want to get you in here as well. You know, I bet there are some viewers and investors, Bob, they see when NVIDIA hits a milestone like this, maybe they sort of think of it the same way as when they see a headline, you know, the market hits a new record. They think, you know, I missed my shot. What do you think about that? What do you see ahead in NVIDIA? What are the catalysts ahead for Jensen Huang Company?
Well, look, I still think there's a lot of opportunity, Josh. And, you know, it is easy to think, oh, all right, that's it, they're over and done. But there are so many things that are really just starting to happen. And again, this is where you have to give Jensen a lot of credit because he was thinking way in advance on a bunch of these things. And so I mentioned earlier at the top of the show, we talked a little bit about this notion of enterprise AI factories, sovereign AI factories, where you've got countries and companies making the investments. Again, that's just starting, so that's opportunity. Let's not forget, also, right now we've been talking about AI as kind of this general purpose blade that can cut through anything. But as you start to refine the AI capabilities, you start to think, okay, now how do I apply it? First thing, of course, that he's been talking about is robotics. And that's a huge upside opportunity. And again, they had robotics platforms years ago that, were very basic, quite honestly. But he set the stage, built the software, built the tools, and now he's seeing how some of the other pieces that he's had can be combined with that robotics side and all of a sudden open up a whole new set of opportunities. The other thing that I think doesn't get much attention, and I bring it up every time I'm here and talking with you guys, but there's a software story. There is a software story that he's starting to build up as well. If you want to get access to the latest, Blackwell chips and what have you, when he sells it to companies like Dell and HPE and Lenovo and these guys that are selling the infrastructure to enterprises and to other governments, it comes with NVIDIA's software platforms, and those have licenses license fees if you choose to use them. And he's got a bunch of other tools that are part of it too. Now, right now that's small, but again, if we're thinking longer term, then you certainly see that opportunity on the software side. Again, robotics, of course, arguably automotive is a different form of robotics when we think about autonomy. So there's that possibility. So I think there's plenty of upside still there. I do, again, think that we're going to see much more competition from them. Everybody wants to have somebody who can compete against, the king of the hill. So that's going to be a part of the story. But again, I think another big barrier that they overcame that, again, the market is kind of getting their heads around, as I mentioned earlier, is this, hey, China, maybe no, maybe yes, but it's all gravy. And that, I do think, is a big factor that helps keep this thing moving.
Dan, I want to bring you back here as well. Bob mentions competition. How do you see the competitive landscape, Dan, for NVIDIA now and ahead? Where's the competition going to come from? Is it the AMDs, Dan? Is it the tech giants, NVIDIA's own customers?
A little bit of column A, a little bit of column B eventually. Right, we have AMD has their latest chips that they're marketing as comparable to what NVIDIA has right now with the Blackwell. But I think the fact that so many customers have already built on CUDA, which is the software that allows you to access NVIDIA's chips, kind of go in there and turn a graphic accelerator into a general purpose kind of computing chip for AI acceleration. That has a lot of people locked in, and AMD offers a competing piece of software that's more open source. But I think at this point, a lot of people are in that kind of NVIDIA camp for the time being. Now, look, if they just build out a data center for Blackwell, they're probably going to get Blackwell Ultra if they're looking to upgrade. It just slots in. That's a big selling point for NVIDIA. If a company is looking to upgrade in the future, though, and AMD is offering something that's as powerful and as compelling at a lower price, because that's their kind of go-to, then maybe that'll be a good opportunity for them. Intel, I mean, they're not even really part of the conversation at this point when it comes to these AI chips. And then, as you said, the actual customers themselves, the Microsofts, the Amazons, the Googles, yeah, they're building their own chips. That's good for them. But their customers may not want to use their chips. They may want to use NVIDIA's. So they still have to buy those NVIDIA chips in their data center, so that if you say, look, I want to put this AI model together, I want to run this AI model on an NVIDIA platform, not your platform, the customers can still do that. So regardless of whether or not they're using their chips for training or things like that, when it comes to inferencing, these people may still want to use NVIDIA chips, and they have to put those in the data center as well.
All right, gentlemen, let's switch gears from one tech giant to another. I want your thoughts on Apple, and specifically, Dan, I don't know if you saw this. Walter Piecyk over at Lightshed wrote a note. It's making some waves, Dan. It's being talked a lot about today. He asked this, Dan. He says, is it time for a new CEO at Apple? Provocative. He says, Tim Cook was the right CEO at the time of his appointment and unquestionably has done a great job. But he continues, this is a pivotal moment for Apple. It's time for more disruptive change, not less. What do you make of that? No, what do you make of that question, Dan?
I think that kind of is almost the antithesis of what we know of Apple to this point. They're kind of a steady ship. The kind of disruption isn't necessarily something that you would think of when you think of Apple and its leadership approach. The notion of having someone who's a product person, not a operations person, is a compelling argument though when you look at where Apple's gone with the Vision Pro. The last big kind of release product that's been a hit has been the Apple Watch. The Vision Pro really hasn't done anything yet. But look, I think one of the things that kind of spurs this kind of conversation right now, at least, is every company is looking for the next platform. Some companies think that it's going to be glasses. Could be. A lot of people are saying, look, Meta's leading in that. Sure, they are. But is it going to be self-contained glasses? Does everybody want glasses? My point of that is people get LASIK surgery so they don't have to wear glasses. I'm literally not wearing my own glasses right now for this piece, right? I mean, I wear them all the time, but I don't want to on camera. I think that's an important thing to keep in mind. Also, if they're not self-contained and you need a phone, I think for now the phone is still the leader in the ecosystem. The other point I just want to make real quick is the AI conversation where everyone's saying, okay, Apple's behind on AI. Talk to a regular consumer and ask them if they care at all that Apple doesn't offer AI at this point, and they will say, I don't know, what, Siri? Like, nobody's going out to spend $1,000 on a phone because of the AI. The way the AI is going to work out is it's going to be bit by bit, and this goes for, I was saying this yesterday about Samsung, be bit by bit, it'll be building up on what you have on your phone, laptop, what have you, and then eventually you'll say, okay, I have a phone now, it does all these things, why would I want to go over to this phone that doesn't have all these things? There's not going to be one piece of software when it comes to AI that you're going to say, my God, this is crazy. I have to go out and buy this phone. It's going to be these individual pieces that become a greater whole. And so I think the argument that Apple's behind on AI, sure they are, right? But they're not Meta. They're not trying to sell ads. They're not trying to get people, hooked onto an algorithm. They're not Microsoft. They're not trying to get people to use the cloud. They're not Google that's doing that, or Amazon. They are a consumer-first company. And at this point, I really don't see a consumer case that makes people want to go, I need this product because of AI.
Bob, my thoughts on this. One, when you ask whether it's time for a new CEO at Apple, first acknowledging that the skill set required to run a multinational global tech powerhouse with its roughly 160,000 employees and billions of devices, what you have to know, Bob, about tech and product and engineering, operations, supply chain, that is a rare skill set, Bob. That is not something you just apply for, right? These folks are unicorns. Secondly, to Dan's point, on Apple and AI, there is clearly disappointment from investors in the street about where they're at. The stock is down 15% this year. But we also know about the history of this company, Bob, and that this is not a company historically that is concerned with being first. They are very concerned with getting it right and then moving in and dominating. There's no guarantee they'll do it again this time, but boy, they have a history of succeeding in their efforts there.
No, I mean, they obviously do, Josh. And you're right. I mean, look, it's a tough role, to have. And I think rather than necessarily needing a new CEO, you could argue, especially, we just saw Jeff Williams leave, so there's, some shakeup there at the high levels of management. Maybe there, you insert somebody in there that's driving a few more of the product type decisions, within that executive group, while, Cook continues to do the things he's been great at, which is, running the overall operation, overseeing the supply chain things, all the things he has experience with. So I think there's a sense that, maybe some fresh blood in terms of the thinking within executive management would make some sense. And we'll see what happens with the new COO. But, I think at the end of the day, you're right, Dan. I mean, people are not buying these phones for AI right now. Most people, they're really just getting started with this stuff. And frankly, all the stuff that's out there already, people don't even know that it's there. They don't know how to use it yet. And I think Apple will probably be pretty good at exposing these capabilities, getting people to understand what they can do with it. And that's something I've been challenging every single vendor. I was talking with the Samsung folks, I've talked with Qualcomm, other phone people as well. Like, guys, this is the challenge. You've got to make this stuff discoverable in a way that makes sense. And those are things that I think Apple would be very good at doing. So It will be interesting to see. I mean, the truth of the matter is they haven't really had a hit product in a long time. And this was a company that was based on hits for a very, very long time. And so it has been a drought. But thankfully, their install base is now big enough. They keep building on the services business, and that just builds on the install base. So they're I think, relatively comfortable in that regard. But down the road, of course, there will be AI services. And that will be the big question mark, is whether they can deliver and monetize on those AI services. And if they can figure out ways to do that, I think they'll be okay. And, in terms of the glasses, look, if we think about how devices have evolved over time, if we've added devices, we haven't really replaced that many devices, right? We added smartwatches and other wearables in addition to our smartphones. I think what we're going to see, certainly for initially, is as we see more glasses, they become supplemental devices that some people will have, some people won't. But you're still, physically, the notion of a screen in front of me that I can do research on and see things on, that's a very different experience than having, a small display in my eye to make me aware of certain things, or tell me what a particular monument is, or who that person is, or what have you, which is great. But again, it's new things that were not being replaced. There are new things being added. And so again, I think Apple's got time there as well. And eventually I think they will do something on the glasses front that is more mainstream than Vision Pro.
Yeah, forget glasses. Dan already told me it's time for me to upgrade my iPhone. So, and I listen to Howley on all things. Thank you, Dan. Appreciate it. Coming up, AMD shares getting a boost today following some bullish commentary from Wall Street. We're going to check in on some of today's top trending tickers on their side. Stick around. Much more market domination. That's still to come. A lot of new commentary coming out from multiple Fed officials. Let's get to Yahoo Finance's Fed correspondent, Jennifer Schonberger. Jen.
Hey, Josh. Yep, we've heard from 3 different Fed officials today, really highlighting the differences of opinion and division within the central bank over the impact of tariffs on inflation. Just as President Donald Trump continues to hammer the central bank to lower rates, Fed Governor Chris Waller reiterated that he sees cutting rates at this next meeting later this month in July, saying that he believes that any increase in inflation from tariffs would be a one-time adjustment, not an ongoing increase. He says we're not seeing a lot of inflation from tariffs just yet, and the Fed is already close to meeting its goals, both on the employment side and inflation just 0.5% above the Fed's 2% target, yet the Fed funds rate 150 basis points above where the long term would be if you're honing in on those long-term goals. He said, quote, "I think we're just too tight and we could consider cutting the policy rate in July," adding, "It's not political." Meanwhile, San Francisco Fed President Mary Daly says she's not seeing evidence that inflation from tariffs is going to prove persistent. In fact, she said she's coming around to the idea that tariffs just don't materialize into large price increases for consumers because businesses are going to find ways to adjust and split that with suppliers all the way down the supply chain. That is what she is hearing from her contacts. She said, quote, "It's time to think about normalizing or adjusting, perhaps not normalizing just yet, but at least adjusting the interest rate to ensure that we can continue to say the economy is in a good place." She seems to be eyeing September and is looking at 2 rate cuts this year. Meanwhile, on maybe the more hawkish end of the spectrum, we also heard from St. Louis Fed President Alberto Musalem, who says he does expect inflation to increase from tariffs, albeit he's unsure whether it's going to be a one-time increase in pricing or something that's more persistent. He says it's just too soon to tell. He says he doesn't expect to really gain a full picture until we get to the 4th quarter of this year or even the 1st quarter of next year. He thinks that we're going to see tariffs on imports for the month of June increase to 8-9% from 2.5% back in April. So slowly starting to see that creep in. So Josh, really getting a range of opinions across the spectrum here from very dovish to slightly more hawkish.
All right. Thank you, Jen. Now time for some of today's trending tickers. We're watching AMD, HPE, and Tesla. Starting off with Advanced Micro Devices, seeing gains today after HSBC upgrades that stock from a hold to a buy, raises price target to $200, Bob. 200, by the way, per Bloomberg. That does match the street high. Bob, how do you think of AMD more, as it's positioned more broadly in this competitive marketplace?
Well, look, I was just at an AMD event a couple of weeks ago, and they laid out this vision and this roadmap in terms of how they were going to be able to compete and win against NVIDIA. And, not only is it the individual chips, but they recently bought ZT Systems, which is a company that, was able to build these big racks, kind of like what NVIDIA has done with their NLV72, the big racks systems that they now sell. And so that was one missing piece of the equation for them. And that is, I think, a really important opportunity that shows that they're moving ahead, they're thinking ahead. As Dan mentioned earlier, we were talking about, they have open source software alternatives versus CUDA. There's a lot of people, of course, who like the notion of an open source solution because there's a lot of people who can contribute to it. There can be a lot of benefits to it. So look, I mean, the company's executing extraordinarily well. I don't think they get the attention they deserve in terms of the technical capabilities they have. And remember, they're still playing in the PC market. They've been playing as well in the enterprise market and in other places as well, in smaller places, in gaming systems. They've been the heart of a lot of the most popular game consoles as well. So look, I think there's a lot of really positive things going on with AMD, and they have, NVIDIA now has an ARM CPU, but AMD has had a long history of a CPU and a GPU, and NVIDIA also has NPUs as well. So all of those sort of core components that they could combine in different combinations, as well as some of the networking chips that they bought as well from Pensando. So again, Lisa Su has put together this nice set of technologies and building blocks that they can use to combine, and I think they're doing a good job. And I think they made it clear at this last event that they think they can be an absolute parity with NVIDIA, basically middle of next year.
And by the way, Street's still fans of Lisa Su, by the way. More than 70% of analysts say this one's a buy. Meanwhile, HPE also in the green today, off the heels of recent Wall Street upgrades and the closing of the company's deal, of course, with Juniper Networks. This one, Bob, you hear bulls say attractive risk reward. They'll say strong networking portfolio, sovereign tailwinds. What do you see?
Yeah, I mean, I was also just at an HPE event a couple of weeks ago as well, and heard their story. And bringing it back to what we were saying earlier, they were one of the first to talk about this notion of enterprise AI and creating systems that they could, sell into enterprises. And it's still early days, but they've been developing, software and solutions. They have these Green Lake services that they've been building up as a way to provide cloud-like capabilities, but for enterprises who want to run some of this stuff locally. And then, the Juniper thing is huge because now that combined entity, if you take the Aruba wireless networking stuff that HPE had along with the Juniper stuff, you have a true Cisco competitor, right? And that's a big opportunity out there. It's not as sexy as a lot of other businesses, right? But at the end of the day, getting all these systems to talk to each other, within data centers, from data center to data center, all of these kind of things, the security that they're embedding into these systems, all of that is critical for enterprises. So there's a huge opportunity to build on that combination, and I think you're going to see them do that. I mean, it just happened, but they had a call recently talking about all the synergies they see, and obviously they're going to be positive about it, but I think genuinely they have a good reason to be that way.
All right, finally, let's hit Tesla real quick because it's the news, with share price rising at promising announcements that the company will expand its robotaxi service. The Austin-based electric vehicle maker announcing that the robotaxis rolling out last month in the company's hometown will extend into San Francisco within the next 2 months. Additionally, all Teslas will also be equipped with CEO Elon Musk's XAI chatbot Grok within the next week. What do you think of that, Bob?
I'm not sure if we're all ready for chatbots in cars just yet, to be honest with you. But look, the other thing is to be fair, I have never been a big believer in the idea that Tesla owners are going to want to let other people just kind of randomly come into their cars. I mean, yeah, there will be some people who will do that, but a lot of the people who can afford a Tesla are kind of want to have their own car and not have people potentially mess it up. I mean, there's just so many things about that whole business model that have struck me as strange for a long time. Yet, the market seems super excited about it. We'll see what happens. Obviously, there are still remaining technical challenges that they have to overcome. We've seen the videos of, the cars not doing what they're supposed to be doing, despite the promises that they would be capable of doing this stuff. So I think there are a lot of big questions that are still out there.
I have the same questions as you, Bob, but then I think maybe it's a generational thing and I'm just getting old.
Yeah,
the kids
maybe
can think
too.
about it very differently, Bob, very differently.
Yeah, but how many kids own Teslas? That's the point.
Just wait, my 6-year-old could drive one now. No doubt, Sid would be right in it. All right, after declining for 5 consecutive weeks, the 30-year fixed rate mortgage moved slightly higher. And Yahoo Finance's Claire Boston has more on that. Claire.
Hi, Josh. Yeah, it was a pretty small move upward this week. We are at 6.72% on average this week, up from 6.67% a week ago. And we can really blame that strong jobs report last week for this rise. It really took any hope of a rate cut at the end of this month off the table. I like to remind people the Fed does not control mortgage rates, but they do move in response to what people think the Fed will do here. And, no cut this month means that yields and mortgage rates moved a little bit higher.
All right, thank you. Appreciate it. Coming up, Delta shares flying higher today as the company beats quarterly earnings expectations. But how should you be positioned within the airline sector? We're going to break it down on the other side with our investor playbook. Stick around, much more market domination still to come. Delta shares are rising as the company beats quarterly earnings expectations. The latest print setting the tone for other airlines against a rapidly changing economic landscape. We're navigating how to play the airline sector with the Yahoo Finance playbook. And joining us now is Savi Saif, Managing Director at Raymond James, and Yahoo Finance's very own Pras Subramanian. Pras, I will start with you, sir, because you talked to the Delta CEO. What do you have to say?
Yeah, he was really sort of kind of upbeat when they reinstated their guidance about the kind of the outlook for the company, right? So basically he's saying that with more clarity in place, with the trade deals coming here and there, the budget bill done, it's kind of letting his customers are actually more sort of inclined to make purchases, and that's leading to really good growth in the premium sector, which is going to be your business travelers, your higher end leisure travelers, seeing that business improve. You're seeing capacity improve because they're sort of focusing more on those premium buyers, but also international is doing better. 80% of the buyers are domestic people, domestic customers. They're traveling internationally. They're doing, you call it strong. So there's some good things there for Delta. Now, they do have some of their metrics, like TRASM and things like that, are sort of coming down a little bit. So there is some work to do there. But you can see the stock move. Investors are really happy, and you can see it also with American and the other United. Those stocks also popping as well.
Savi, I want to get you in here as well. Delta reports this stock, Savi, is up 12% right now. What do you make of that move? Is that move justified, Savi?
Hey, Josh, I think us and many investors coming into this quarter, we're a little bit cautious because this is a quarter of two halves. And as Pras mentioned, like the premium and the international that have been strong continues to be strong, but some headwinds in the first half of this quarter. And then potential for kind of things to improve in the second half, which Pras talked about, as well as people get a little bit more confident. But I think a lot of us are kind of focused on that kind of uncertainty in the second half and pressure in the first half. So I think what you're seeing here is maybe short covering, maybe a relief rally, that things are better than feared here.
Savi, one thing that struck me, I'm curious about this. So main cabin, Savi's down 5%, premium cabin up 5%. What is that telling us, Savi, about the traveler right now?
Yeah, and what you've seen most of this year has been kind of main cabin struggling, especially as things deteriorated in February and March and April. It was main cabin that was kind of bearing the brunt of that. And the encouraging comments that Delta made today were that you are seeing a lot of capacity coming out. Even Delta, by the fourth quarter, their kind of domestic capacity or seats should be flat. And actually their main cabin seats are down year over year. So a lot of kind of supply being addressed on the main cabin side. So it's kind of indicative of what we're seeing in the economy. Premium passengers are doing better, but at least on the supply side, things are looking better as you exit the year on the main cabin side. And
Pras, what did the CEO have to say about capacity specifically when you talked to him?
He said that they were going to grow it, I think, slightly, not what they originally had planned early in the year. I think about 1% capacity growth potentially. I think they see the kind of the writing on the wall that there is overcapacity in general in the business. Bastian had mentioned that there might be some sort of shrinking of the business, of the actual industry with the fact that there's so much overcapacity on that budget end. Delta, that's not a Delta problem, but you fly on a Delta flight, there is a significant portion of main cabin seats there. They still cater to that customer. They need to grow that customer. You can't just sell first class and premium plus, right? So there is a little bit of a transition there for all airline operators here.
Savi, I'm curious, what does Delta have to say about corporate travel, and what do you see for corporate travel broadly, Savi? I mean, the economy's still resilient, tax bills now law. What do you see ahead?
So right now, the trend is stable, actually. There's not yet an improvement from some of the changes that you've seen more recently. When we were exiting last year, in the fourth quarter of last year or early this year, corporate sales at Delta were up about 10%. And if you look at 1Q, they actually moderated down to about 5%. And that's the same level that you saw here in the second quarter. There's hope that maybe as we get kind of past the summer period, that maybe corporates with having some level of greater certainty might start to come back a little bit again. But right now, stable is kind of the word.
So Savi, I know Delta Listen is enjoying a big move right now. You say stick with it. You're telling your clients this one's a strong buy, Savi?
Yeah, we're taking a longer term look. The way the stock has moved, one thing that we caution as we get to the rest of the earnings here is, third quarter guidance, EPS guide for Delta was kind of very good, both us and consensus towards the lower end of that guide. Half of that is on the revenue side, looking a little bit better than feared, but half of that is also Delta's own cost execution. So, maybe a little bit of caution near term in that, yes, things are getting better, but we're still early days. But generally, as we look kind of 6-12 months out, we think Delta is really well positioned and good upside here.
So, all right, so that's a strong buy, Savi. Let's move to one you're more lukewarm on, because now we wait for United for their report. That one you have the equivalent of a hold, Savi. How come?
Yeah, with United, we don't see anything wrong there. Their margins are good. Their earnings are good. What we've been worried about is kind of international. Is there a possibility for international to slow? You've seen the dollar strengthen here. Does that cause some of that enthusiasm that we've seen in the last few years for international travel to start to slow down? And United has the most leverage to international travel. So on a relative basis, we felt that, there's a little bit more torque on the domestic side here and the main cabin side as those things start to improve. So nothing negative on United, but we just like some other stocks on a relative basis.
One ticker I wanted to squeeze in here quickly, Savi. JetBlue, also a hold there, Savi. How come? What would you need to see before getting more bullish?
Yeah, JetBlue, they're doing all the right things. We believe it's just their, 2 years of being kind of having their focus taken away related to the Northeast Alliance and then the merger with Spirit, failed merger with Spirit. They've kind of dug themselves into a deep hole in terms of their balance sheet and in terms of cash flow. So I think, and they also have this GTF engine issue where they're much more exposed to this than all but Spirit. And so we just think it's going to take longer for their earnings to recover, for their balance sheet to really improve. So not too excited here in the near term on JetBlue.
Savi, Praj, thank you both. Appreciate it. While we are wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.